Coming out of a pandemic, we were all yearning for a return to the old normal. But faced with the war in Ukraine, supply chain issues, inflation, rising rates, to name a few, it's very clear that a return to a new normal would be very different from the old normal that we were used to. Greetings, viewers. You're watching Aman Sangha, Independent Financial Advisor in Mississauga, Ontario. For my update for the month of May, I will be breaking it up into three main components. We'll start with the index returns, and then we'll talk about the markets, especially in terms of is there more pain still to come or we've kind of bottomed out. And lastly, we'll talk about where we are in the fear and greed index. I haven't shared this for a while, so just bringing it out from a big picture perspective. So let's start with the index returns. And it's the same story it has been for the last few months, that major indexes are in the red, whether it's bonds or it's equities. The lone bright spot is the Canadian TSX, which just by the virtue of being flat has outperformed its American counterparts 12 or 21% in Canadian dollars, and is just by being flat. And that's the good story here. So let's move on to the second part, and where I wanted to spend some time. What's next? Where do we go from here? So if you've watched the markets, and these are the returns for S&P as well as for NASDAQ year to date. And what you can see is that we've come down from the highs for both indexes, but seem to have bottomed out by the end of May. And right now it's struggling for direction. So the big question, I think, like I'm getting this a lot, is is it the end of it, and that's it, and now we resume our upward trajectory, or there is more pain to come? And that's basically the focus of this update, and where I'll be spending a bulk of time. So to understand the drawdown so far, the first thing I wanted to look at is the multiple, the price to earnings multiple. How much price, how much dollar is each dollar worth of earnings for, or how much are the investors willing to pay for it? And most of the drawdown right now has been because of the multiple contraction. And you can see that the percentage change is comparable to a severe drawdown that we saw back for the financial crisis. And so just from a multiple perspective, I think a lot of it is already priced in. It would be whatever reduction comes from here on will largely be driven by earnings. So let's move to the second part of the equation. If the multiple is probably where it needs to be, what happens to earnings? So to understand earnings, this is a plot between the central banker's monetary policy and the S&P earnings per share growth. The monetary policy is in the red line, the EPS is in the blue line, EPS growth is in the blue line, and there is a lag between the two of about 18 months. It's not a perfect correlation, but generally what you see is when there is a restrictive monetary policy, as in the rates are going up, the earnings tend to go downwards. And when there is a loose or a accommodative monetary policy, the earnings are going upwards. Now, if we see this in terms of where we are in the current cycle, the Fed is continuing to hike rates, and we're seeing the same in Canada. This to follow, and this pattern were to hold, the earnings will likely come down from this point. Now, with this in mind, let's look at what's the chances of the earnings coming down. Now, if we look at the current projections, now these are the blue line is the earnings per share, the actual, and the gray line is the earnings per share projected. So far, the analysts' estimates have not been revised downwards, as in the hope is that the earnings are going to maintain. But there has been no dearth of warnings from established players as well as the new era players of profit warnings slash and workforce size of that just tells that inflation is starting to bite, and we are going to see some impact. What that impact is, it's still to be determined. There are some analysts which have downgraded the earnings, but it's a small percentage right now. So which of these two holds? Do the earnings maintain or the earnings go down will largely determine where stocks will go next. And just looking for data points as to what could tell us about what could possibly happen. One thing that I noticed in the last month's update was the negative surprises coming out of US. And you can see that for the month of May, this negative surprise is comparable to some of the severe declines that we've seen in the past. So it's one of the big ones. Although this could reverse the month after, nobody's sure, but these are the things that you look out for. But if inflation stays high and consumers are forced to scale back their spending because they're spending more on gas, that'll mean less money for discretionary items and less to spend elsewhere apart from fuel and shelter. So I think the earnings cycle that comes out of Q2 or in Q3 will be a major determinant of where the stock markets go from here. I'm still not decided. I'm still on the fence, just watching it. But just from a high level perspective, I want to go back to the fear and greed index. It's been widely quoted. Now, currently, the reading starts is just in the fear index, but it was in the extreme fear category just a few days back when it seemed like it was going down further. Now, if you are a long-term investor, I think there has been a drawdown from the highs, and you want to either start a new position and or dollar cost average the cost of your portfolio. It could be a good point where you're looking at the next 3, 4, 5 years for your returns. However, if you are worried about preservation of capital, I don't think now's the right time to just jump in, because there's too much uncertainty of what's going to happen next. And the key to all of that is how the earnings show up in the subsequent quarters. Now, irrespective of which camp you are in, whether you want to preserve capital or you want to deploy it, there are solutions in both camps, and the number to call is 905-363-5035. Well, thank you again, everybody, for watching. And if there are any comments, you want to discuss something, you can leave them below or just give me a call, and we'll be happy to chat with you one-on-one. Bye for now. I'll be back with my next month's update. Take care.